Let's welcome on board Kunal and Naresh as well and find out what the technical setup this morning is looking like. Kunal, hi, morning. Got whacked yesterday. Backs up the 100 DMA on the Nifty. What are we in for today?
So yeah, I think we're back again to that moderate kind of a zone for the index, and I think bound to be because after when the markets are preparing for such kind of an event, they want to go into the event on a much more lighter note. In fact, that's what we've seen yesterday, almost an 18.5% drop in the open interest for the bank Nifty. This could actually be one of the higher drops in terms of percentage for the banking index on a single day, at least over the last many weeks. So that itself indicates that the markets are going into absolutely light in terms of the positioning on today's outcome. But I believe that this could also indicate that we are now, at least for today, we should now be more range bound for the index, because when we generally lighten up the positions on the index futures, the extent of volatility drops down on an intraday basis. So we could probably be looking at more of a range bound kind of a day, maybe a 50 point plus minus range is what I'm expecting for the index today for the Nifty. That's it.
Kunal, what happens to this, sort of sand in line 23,800 level? Because that was the swing high level, right?
Yeah, there was a swing high level. Again, the second resistance for the index in the last 3 months. The 200 moving average was also closer to that 23,800 mark for the Nifty. It's a very important resistance line, and it's also you're marking the 50% retracement of the entire 4,000 point correction which we've seen for the Nifty. So very important resistance line. And generally, what we've seen that whenever the index comes back into a bounce back mode or a rally or a recovery mode, it tries to take a pause at this 50% retracement. There are times when the pause has lasted for weeks before the index gathers momentum, steam back again, and then tries to challenge the previous resistances. So we need to see how the index behaves this time around. It's not a surprise that the index has scaled a bit lower from the 23,800 levels. I think on the downside also, what's important is the 23,000 mark, or 22,800 to be precise. So my sense is that we should now be stuck into this 800 to 1,000 point range for the Nifty over the next 1 to 2 weeks on a broader basis.
So Kunal, what is your stock bias going to be, or would you say just keep it light today?
No, in fact, there are many stocks which are actually showing signs of relative strength. So we were discussing the financial services sector. Poonawalla FinCorp has been one of the stocks which has been doing reasonably well. There's been strong jump in the relative strength score for the stock, the RSIs, the indicators, as well as the price movement in the last 1 month. So would be bullish on the stock from current levels. Would look out for targets in the range of 370. Stop loss could be kept at 334. The second would be a buy on Piramal Pharma. That's another chart which has been looking extremely strong. My sense is that the stock is heading towards a breakout on the short to medium term time scale, recovering from that sub 200 levels to now 220 plus mark. So would look out for targets in the range of 232, stop loss at 218.
If you like this video, then like, share and subscribe to ET Now.